Hey guys, it's Tyler. Nice to see you again. It's been a while since I've made a video. I'm actually really excited to get back into space. I really wanted to make a video for you guys today. I know this has been a really tough time for us financially. You know, the economy isn't open right now for most businesses, and you know, it's a really hard time for all of us. And that's one of the reasons why I wanted to make a video today, is because I really wanted to stress the importance of having a second source of income. This time made us realize that we cannot rely on just one source of income. We actually have to have second or maybe three, four other streams of income to really survive, and especially during these times. I'm going to be specifically talking about condominium investing here in the Philippines, and actually how you can make money regardless if there is a crisis or not. So stay tuned for today's content. Let's get straight into it, guys. Let's talk about the differences between RFO and pre-selling. So an RFO is basically ready for occupancy. What does that mean? Ready for occupancy. It basically means the developer, the condo builder, has already established the building. It's already constructed, so tenants are able to move in right away. Now, the thing with RFOs is that it usually requires that you pay the balance in full of the condominium before you can actually move in. Or if you don't have the cash to pay it in full, you'd actually have to get bank financing. Also with RFOs, you actually require a large spot down payment. So spot down payments are basically a large investment. It's usually about 10 to 20% depending on the developer. I've seen much as 30%. But just for this example, 10 to 20% is the standard that I've been seeing lately in the condominiums here in the Philippines. Now, the thing with RFOs is that it's quite expensive in the beginning. That motorcyclist is there. It's loud, but it is quite expensive. It is a large investment, and in terms of end use, I think it would be a great investment. But in terms of renting it out, it could be quite expensive for especially Filipino buyers here, or for the average investor here. So that's basically how RFO units work. I mean, you could rent it out after you get the RFO. However, most people don't have a large investment to actually invest in the beginning to begin with, nor do some people have, for example, a large amount of cash just lying out to actually pay the balance in full. And some people don't even have enough income per month to even be approved for a bank loan. So let's go into the next segment, which is pre-selling. So what is pre-selling, Tyler? Pre-selling is basically when you're actually buying a project, a condominium project, before the building has been constructed. So let's say, for example, the developer is starting to build a new project in Metro Manila. For example, you are buying it when it's being started. Now, why do you want to do that? Because usually when the project is being built, it's usually very cheap to actually get in, because obviously there's not much demand for the project yet, and the prices are based on supply and demand. So obviously as time goes on, there's going to be more demand, thus the prices would rise, and also because of inflation. So basically the whole point of getting pre-selling units is so you can get in early while the price is cheap. Now, why do you want to do that? Is because it doesn't usually require a down payment at all. Usually how developers do it is that they don't ask for a large spot down payment. Instead, you'd usually allocate 39 months or whatever term that may be throughout a specific period. So in my case, I actually bought a condominium here in the Philippines. For an example, I got it for 39 months. And within that 39 months, that would be the 20% down payment that the developer requires. So instead of actually putting a spot cash down payment, you're actually paying the spot down payment within 39 months. Now, after the 39th month, you can actually rent it out to potential tenants. So for example, I have an example here that I'm expected to pay about 25,000 for the bank loan per month for 20 years, for example. and you always want to amortize it the longest period so you can get the lowest monthly. And then within that, for that $25,000 pesos payment per month for 20 years, I can potentially rent out the unit from anywhere from 30 to 35,000 per month. So if you really think about it, that would be about 5,000 to 10,000 pesos cash flow. Another thing that I wanted to touch upon is that as I'm renting out the unit as well, the price of the condominium unit is actually going up year after year, quarter by quarter, depending on the demand, obviously, of the condominium unit, and also depends on the location of where the condo is. So it's very important that you're near BPOs, major universities, hospitals, pogos, basically places where people are around and it's very convenient for them to travel day after day. Another good thing about pre-selling units is that when you're actually getting the pre-selling unit, you can actually do a buy low, sell high strategy, or what we call the flip. So let's say, for example, during the pre-selling stage, you're getting a condominium for, let's say, around 3.5 million. And let's say in the next 3 to 4 years, it goes to about 4.5 to 5 million. You can potentially make during that time between 1 to 1.5 million, depending on the market conditions. Obviously, it depends on supply and demand and what the prices will be during that time. Also, what location, the demand for that specific area. A lot of factors, but long story short, you can actually do a flipping strategy where you can buy low and sell high. So it's really good to start early, because obviously when you start earlier, you're giving time for the market to appreciate over time. However, if you wait too long, you might be able to buy at a very high price. So that's why I always encourage people to actually invest early, which is what I'm doing while I'm still young, to get prices at good deals right now. So that's another strategy that you can use. Another thing that I wanted to touch upon is that a lot of people think that condominium investing is very expensive. I wanted to kind of share with you guys something that I've learned throughout investing in condominiums here. Within the period that you're paying for the down payment for a pre-selling unit, for example, you're paying for 39 months. You really only have to worry about the 39 months, and the other months after you've paid the down payment and you're going into financing, the condominium is actually self-liquidating. So what does that mean, self-liquidating? It basically means that the tenant is actually the one paying for your bank loan. So let's give numbers here. For example, let's say, for example, within the 39 months, I pay about 400,000 pesos. But after I pay that 400,000 pesos, I still have a remaining balance of, let's say, 3.6 million after the 39th month. After the 39th month, that 3.6M is actually covered by the tenant. So the tenants are actually the one paying for the bank loan. So if you really think about it, you're not really the one paying for the bank loan. I mean, obviously there is risks that you can't rent out your unit because let's say your unit is vacant. That's why it's very important to market your condo, and it's also very important that you choose the right location. So that is really kind of what I wanted to stress, that a lot of people think it's very expensive, but if you really think about it, you really only have to worry about that down payment, the amortization for the down payment. Let's say in my case, 39 months, and after the 39th month, the tenants would be the one that's actually covering the bank loan. So that's what I wanted to put out there for you. Also, for pre-selling units, the good thing is you can actually prepay your balance whenever you have extra cash. So let's say, for example, you have extra cash and you wanted to pay the bank balance. That's actually very beneficial, because when the time comes where you actually have to borrow money from the bank, they're not going to ask you for such a higher income, because you've already paid out most of the balance, or you've paid off the balance. So how it works with bank loans is that, obviously, if you have a large bank loan, if you actually have a large outstanding balance, the banks are going to ask you for a larger income. But if you've paid in advance and you have a lower balance, the bank will ask you for a lower income. So that's a strategy too on how you can actually get financing, even if you don't have enough money within that, if you don't have enough money during that period. So it kind of gives you that time to save up until the time where you actually have to pay or get approved for the bank financing. So that's kind of what I really wanted to share with you guys today. It's a lot of information, but I'm actually with SMDC guys, so if you have any questions about condominium investing and actually how you can actually invest and actually make money, passive income, please feel free to contact me. My details are down below. And if you found any value in this video, I urge you all to like, subscribe, comment, and if you have any questions, please feel free to contact me. So that's it for today's video, guys, and don't forget, you are the only ones that can determine your future. Thank you, and see you in the next video.